really my intro is I didn't ever believe or think that I was going to be in this position or have a company like I do today. That was not my goal when I was in high school or college, that I was going to teach people about IRAs. First, I thought I was going to play for the Chicago Bulls for the longest time, as probably most kids and that were born in the '70s and when watched him. But I can tell you quickly that changed. I thought I was going to be a dentist. I thought then I was going to do real estate and everything. When I dropped out of college, I dropped out purely because I saw the lifestyle of what people were doing in the alternative investment space, in particular the real estate space. And so that was 24 years ago, and I've never looked back. I have figured out, I have unlocked really the keys and found success in a particular area that I'm going to share with you today. I am not the smartest guy when it comes to all the stock market stuff, which is probably why I'm not really heavy in the stock market, and I'm not the smartest on a lot of different things. When it comes to this subject today, I've been doing it from the beginning of my career. I've seen hundreds, if not thousands, of individuals use what I'm going to share with you today to prepare them better for retirement and or to defer or avoid paying taxes altogether. And so the beginning of this presentation, especially for you first timers and new people listening to me, this will be great information for you if you've never heard of this too much. And for those that have listened to me before, thank you and welcome back. And just a reminder, this is something that I do, me and my company, every 2 weeks. And so we want to put out as much education, much content, so people just can make good decisions on behalf of their own money and or make decisions on how to scale and get access to money to do better financially and be better financially prepared. And frankly, this is something that is near and dear to my heart, not only because it's worked for me, but also I feel like most people were never taught about this, even though it's been around for over 40 years. And I feel like the rich, the Congress, the politics, they're aware of it. They create these rules and these opportunities for themselves so they can go out and avoid paying taxes. They can go out and invest in alternative assets. And this is something that I've been doing and I've taught many people to do over the last, in particular, 15 years, that you can do as well with the smallest of IRA accounts. And so let me, I've got just a few slides, probably 15 slides I want to share. Let me make sure you're up here. View, slideshow. Okay. Can we see it? We good? And once again, I'm going to leave plenty of time for questions and answers. I'll jump into the best that I can. If I don't have a great answer or an answer for a particular part, I will get back to you, unless it's in particular about Jesse, the Fed chair, the new Fed chair. But I will tell you kind of where I think or the potential. I can tell you where I think the market is headed, or at least where I think I'm going to invest my funds. So let's just jump into it. And again, as always, my disclaimer here: I'm not a financial advisor or attorney or CPA. So we are at Horizon Trust Company a passive custodian. I'm going to talk about what that means for all of you. I don't sell investments. I'm not going to be here to say, hey, you should invest in this asset. I shouldn't say that. I will actually propose that you should invest in real estate, but I am not going to tell you which investment in real estate you should take, nor do I get paid on any investment decisions that you make. Our goal at Horizon Trust Company is to give you access, unlocking your retirement account to let you invest in what you like and and you understand, or who you like, and which is very unique, very different from the typical stock market. So that being said, I'm going to share kind of in the beginning and towards the end as well, just some examples, real examples of how I've spent where I've put my money and how I've used self-directing, and also a little bit more about the trends in real estate as well. So let me just jump into it, especially for those that are new. And again, just these first couple of slides for those that have been here for a minute could be a good refresher. But basically, a self-directed IRA is really a retirement account that gives you full control to invest in alternative assets like real estate, like precious metals, promissory notes, cryptocurrency, still maintaining the tax advantages of a traditional or Roth IRA. So unlike the standard IRAs, a self-directed IRA is administered by a custodian, Horizon Trust, like us, that allows these non-traditional investments for you to invest in. And one other thing I'd like to share on this is a self-directed IRA. For many of you that are new, they're most likely here to learn about what a self-directed IRA is and how do you gain access and basically tap into retirement accounts, which is what I'm going to talk about today. A self-directed IRA is not a type of IRA. It is the IRA that you currently have. Let's say you have a traditional or Roth or a 403B or some kind of retirement account. When you roll or transfer those funds over to us at Horizon Trust Company, that happens in it's a tax-free transfer over to us, then we hold it in custody on your behalf. It is the rules as far as how much you can contribute and distribute still remain the same. So it would become a self-directed Roth IRA or a self-directed traditional IRA. Self-directed just means that you can direct where you're going to invest those funds. It is not a special type of IRA that has different contributions and distributions like RMD distribution rules. They all remain the same. So I want to make sure that you understand that, because I've seen a lot of people say, hey, look, I don't have a Roth IRA. I have a self-directed IRA with you at Horizon Trust. And that's not necessarily the case. You have a self-directed Roth IRA with us. So the same rules apply as far as how much you can put in, how much you can take out, and when you have to take it out. The only difference really is where you're actually putting your money, which is, frankly, in my opinion, the most important part. So, let's talk about this for a minute as well. Custodian-controlled self-directed IRA. We are a custodian, Horizon Trust Company. We're a licensed custodian. We are audited and report to the banking division, to our state banking division in New Mexico, and been doing so for 15 years. And what we do is we hold the retirement account for you on your behalf. And so when you move your funds over, let's say that you decide, and we're going to get into this here shortly and some different things that I've personally done and what other people are doing with their IRAs. But the first step, when you go and you decide that you want to invest in a real estate note or a deed of trust or cryptocurrency or whatever it may be in a business, the first step is moving your money over to us at Horizon Trust Company. So now once it's established with us at Horizon Trust Company, you're at the account, it would be called Horizon Trust Company, in my case, Horizon Trust Company, FPO Greg Herleen, into my investment. So let's say I'm going to invest into a real estate deal. When I want to do so, I would then submit a simple form with the proper documentation to Horizon Trust, and then they would send the money to that title company or to that investment. So I, the investor, would have to submit the request to Horizon Trust Company, the custodian. They would release the funds to that investment. It says the speed is slower in this, and we are the fastest. And the reason why we put this here, because of the next slide, this is when an individual works with us and they want to start using their self-directed IRA to invest in different assets. You have to make that request. And that request and us sending the money out to the title company or into your investment could take 1 to 2 days. It's not within hours. It takes 1 to 2 days. But many investors love just using it just the way I'm explaining it right now, because it also is a guardrail for compliance, making sure, that you do it the right way, that you don't make any prohibited transactions, which we'll talk about later. So I would say 60 to 70, probably closer to 70% of our clients are using their self-directed IRA in a custodian-controlled account with us, meaning you request the funds from us to go to a certain investment, and we do so. The other type, and many people talk about, in fact, I'm going to go back to that slide. The other type of IRA is the checkbook-controlled IRA. And I think someone even mentioned that in the chat or in a question already. I saw it pop up. The checkbook-controlled IRA the biggest difference here is the speed. And I'll get to that in a second, but this is just one additional step that you, the IRA owner, has to do with us from the beginning. Basically, once your money is moved over, let's say you've got an account at Charles Schwab or wherever you have your money at currently, and you move it over to us at Horizon Trust Company, you then would establish a checkbook IRA. When I say you, we help you do this. We get it all set up for you, and many of you probably have this that are even listening today. But then you'd advise and submit a request to have us send your money from your IRA to this checkbook controlled IRA, which is basically a brand new bank account. And this checkbook controlled LLC, it's basically an LLC, is owned by your IRA. And so therefore, your monies go in there. Your IRA is the owner of this LLC, but you are the manager of this LLC. So you therefore can go to the bank and you can get a bank account established on behalf of this LLC that your IRA funds are sitting in. And then now that the money's in this LLC, what kind of speed do you have now? Going down to the third bullet point, it is the fastest speed. You can get a cashier's check. You can use your check just from your LLC from the bank. It is very quick. This checkbook control type of account is very popular. I don't always recommend it. I feel like it's really for those that have different investments that have lots of transactions, like for example, maybe a fix and flip or a rental property where you've got to pay taxes or utilities, contractors, et cetera. And so instead of every time you're needing monies to come out of your IRA from Horizon Trust to these vendors, making that request every time, you can use your LLC. And so this is ideal for real estate investors that are a little bit more active using their self-directed IRA. The pros is the speed and the control. The cons are you got to make sure you don't mess it up. And so meaning you can't do prohibited transactions. And again, there's a whole, you can log on to our website. We can kind of teach you about what some of those are, but you can't pay yourself a salary. You can't pay yourself or your family, different distributions, et cetera. You can't commingle non-IRA money with your IRA money in your checkbook LLC, things like that. So the compliance and the bookkeeping is more on you. So those are the two types of kind of accounts. Now, who qualifies to open up a self-directed IRA account? Anyone listening, especially a lot of you are new, if you have an IRA, or if you have an old 401k or 403b or 457, et cetera, or TSP, if you get some kind of old employer account that you used to contribute to that you're no longer employed at, you qualify for a self-directed IRA. If you have a current traditional Roth, simple SEP IRA, those all do 529 plans. These all do qualify to be transferred over into a self-directed IRA account. Also, what I'm about to share with you, I'm going to dive into some of the things that I personally have done with my IRA. That being said, what I'm sharing with you today, you don't have to do with all of your monies. For example, if you have $100,000 or $200,000 or $1 million IRA at Charles Schwab or Fidelity, TD Ameritrade, where it may be, you can just move a portion of those funds to your Horizon Trust Company self-directed IRA account and just kind of get your feet wet, see how it works, invest in an alternative asset and see if you're comfortable with it, if it goes well, and if you decide you want to move more money over there. It's for you to kind of control how much you do. And some people are just sick of the volatility of the stock market, the ups and downs, don't have confidence in it. And they're like, hey, look, I just want to get all of it out, or I just want to get some of it out and do something a little bit different. So that's really up for you. So one of the things that I talk about often is really taking advantage of the self-directed Roth IRA. Excuse me. So on the self-directed Roth IRA, it's really about only paying taxes up front. And so for those of you that have a traditional IRA, it could, and you'd meet with your CPA, but it could make sense for you to move over, once you move your account over to Horizon Trust Company, to convert it to a Roth IRA. Now, there's things that you want to be aware of. I'm not going to dive too deep into that, but I can if there's some questions that you want to throw in the box towards the end. That being said, if you have, let's say, $100,000 traditional IRA and you convert it to a Roth and pay the taxes now, that could bump you up potentially to a higher tax bracket in that year that you do it. And so you want to be really careful and aware of when to convert your traditional to a Roth. You also don't have to convert it to a Roth. I just find it more advantageous over time if you plan on having this account for more than 10 years without taking distributions, 10 or even 20 years, to convert it sooner than later. Why? Because you're paying taxes on a smaller number now rather than a larger number later. And as much as people like to say that taxes will be less when you retire, in most cases, that's not going to be the case. And so here's, just a good, easy example of if you left it in a traditional IRA or if you had it in a Roth. And so, over a 10-year period at a 12% rate of return, it's almost $100,000 difference at the end of 10 years just by converting it now rather than just leaving it as a traditional and paying the taxes on it. So I share this with you. I think numbers for me kind of tell the story. Why would one want to do that? Well, if you're going to make double-digit returns over the next 10 years plus, it could make sense. The other thing is, and again, you talk to your CPA about this, it could make sense for you to convert a portion of 100, like in this example, you could convert $30,000 per year into your Roth. So the tax consequence is much smaller. It's a third every single year, so it doesn't potentially bump you up to the next tax bracket, if that makes sense. So it's important to understand. You don't have to do it, but it could be definitely advantageous to make that move if you plan on making some pretty big returns in your self-directed IRA. So here's just a couple things as far as some updates and IRS rules for those of you. There's catch-up provisions and that you can do to contribute more to your retirement accounts, which can be very helpful if you've you're in that place now. You're like, oh shoot, I'm in my 50s and I have not saved enough money. There's some new catch-up contribution limits you can be putting more money in, and it could make sense. The other thing is they've gotten rid of the Roth 401k required minimum distributions. Required minimum distribution is basically when the IRS requires you to start taking money out of your retirement account. That was eliminated as well. You can contribute more to 529s and RMDs in general, if it's not a Roth 401k, start now at the age of 73 and not at the age of 70 and a half. People are living longer. This is all good. People are living longer, so therefore they need everyone needs to make sure they have more in their accounts and save a little bit longer, and they're not requiring that you take money out as quickly. Those are just some. So look, here's some the top prohibited transactions and also prohibited or disqualified people that you can invest with. This is something I can dive deeper into at the end too. If you've got questions here, we're gonna open it up to questions here shortly. But this could be one. Can I invest with so and so, or that's something that I can kind of dive deeper into that I can talk about that I even do with my kids. But here's some of the things on the left in the gray that you cannot invest in. You can't invest in collectibles. You can't invest in antiques and alcohol, things like that, or life insurance for yourself. So those are the things you can't invest in, and that's frankly way easier to talk about than what you can invest in. If you're listening to this again, or many of you are listening for the first time, a self-directed IRA is so attractive and exciting because you are able to take money, some or all of it, out of a current retirement plan, move it into a self-directed retirement plan, and then invest it in alternative assets like cryptocurrency, like precious metals, like real estate. You can do it in syndications and lending and promissory notes. You can invest in so many different. You can do a fix and flip, a simple fix and flip, and you can't call your advisor today and be like, "Hey, financial advisor, I want to take out $100,000 and flip this piece of real estate and make it a quick $10,000 or $20,000 over a 6-month period." Can't do that. They won't allow you to do that. You have to have a custodian, a trust company like ours, to allow you to gain access to your retirement account. and then move forward. So that's how that works. As far as the family tree, I share that with you because there are some disqualified parties and who you can invest with. In the red, those are people you cannot lend money to or give money, IRA money to back and forth at all. So I cannot lend money to my wife or to my kids or to my parents or grandparents. Now, one thing you can do is you can do real estate deals with them, meaning you guys all can come together and put your retirement account funds together. Let's say your kids all have $6,000 in their IRAs or in the Roth IRAs. You've got 50 and your parents have 100. You can come together and create a checkbook LLC, and it can be owned by all of your IRAs. You could have 5 or 6 owners of that LLC, all IRA owners. And then that LLC can go out and transact different investments. And now this is a perfect way for maybe a kid who only has $6,000 to actually get into a $100,000 or $200,000 flip, if that makes sense. Now, the blue names here, and it goes farther and wider than this, of course, you can lend money to, which I find it interesting, and I'm sure there's reasons for it. You can lend money to your sister or brother or sister-in-law. I think there's probably some interesting reasons for that. I don't need to go too deep into that. Just my opinion at all. These are the type of self-directed IRA accounts in general that we hold. There's a few others, but I would say this covers about 95% or so of the accounts that we hold: traditional Roth, Simples and SEPs, Inheriteds, HSAs, etc. So a couple last slides here. Well, more than that, actually. I've got a few. I want to share with you actually some specific deals that I have done recently and also that I started with, just to give you an idea. Here, real quick, those that use self-directed IRAs are typically real estate investors, entrepreneurs, business owners, people that like these alternative assets, people that are a little bit more sophisticated, looking to maybe use leverage as well. That's typically who's using self-directed IRAs. Only 5% of Americans do this. And I frankly think only 10 or 15% should be doing this. I don't think more than that should be doing it. Most people are not active or sophisticated or doing their education to see where they should invest the retirement funds. If you are not doing your due diligence on where to invest your retirement funds, you should not be directing your own retirement funds. So this is these are, I've kind of covered this a bit already. You get way more options, some great tax advantages, and you get control of your retirement money. And frankly, I don't think anyone cares more about your money than you do. And this is why the self-directed IRA has done so well. So many people like it because you have control of your retirement funds. So I would say 75 or 70 at least percent of our clients are investing using their self-directed IRA in some kind of real estate. They are, and I shouldn't say they, but the big reasons or things they can do with real estate are this. You can leverage your self-directed IRA. So you can buy a piece of real estate. Let's say it's $200,000. You can put down $100,000 from your IRA. You can borrow from a non-recourse loan, the other $100,000, and flip or fix and flip or do an Airbnb or investment property with your IRA. So leveraging, and that really compounds the upside of your self-directed IRA as well. There is some UBIT discussion you can have as well that we can talk about for those that want to learn more about leverage. We can talk about that as well. Diversification. People just want to diversify against the stock market. I would say this is why most people, for me, why I like real estate. I feel like even though the real estate market does change, especially with interest rates, etc., it's a hard asset. It's not something where someone wakes up and Elon Musk makes a decision that day and all of a sudden the market drops. And so I like having control. And I also like having, less volatility when it comes to real estate. And I know how to handle when there's a problem. I know how to handle that asset when it comes to real estate. When it comes to stock market, I have very little control, if any control. My control is when to buy, when to sell. So, and that obviously covers the asset control and inflation. I do feel like with rents changing and inflation, etc. If you can find something, especially today when interest rates are still a little higher, right? They've gone down over the last couple of years, but if you can find an asset that the rental income can cover the debt and or give you a 8 to 12% rate of return on your IRA, with the upside of also the the appreciation when you go to exit that property. That's a big deal. Like, you could be getting the double-digit teens and maybe even 20% on these different real estate assets. So investing with an IRA is in real estate has been definitely something that I've spent a lot of my time on. So these are two different deals, not the same deal. That would be a major problem. In the first couple of months that I was working in my early 20s, at the age of basically when Carson, I think someone said they work with Carson a little bit, money mentor. So I don't know if he's seen a deal quite like this. The left deal is the first deal I did. It was a condo in Las Vegas. And my first deal, I did not have any money. I had no bank would lend me money, and I met an individual, I got, I think, 23, 22, who lent me $60,000 from his IRA to buy the condo. We bought it and fixed it and flipped it. And at the end of the day, his IRA moved from, he made $12,000 in profit. I made $4,000. And I was happy as can be. A 23-year-old, now imagine that's 23, 24 years ago, making $4,000. I mean, that was all I needed for like 2 months of living. And so but what I think the most powerful thing that I learned here is I learned that an individual with an IRA could be my business partner. Their IRA was my partner. Their IRA partnered with me on this deal. And on that deal, I negotiated 75% of the profits to go to this person's IRA. Maybe I wasn't a good negotiator back then, but it worked out for both of us. And I learned that someone that has an IRA could be my partner. And I think that was one of the most powerful things I could have learned. I learned how to use the IRA. I learned how the alternative asset space worked. And I built confidence in my ability to start buying and fixing and flipping. The other side is just a fun picture of a deal a partner and I did later on. People ask about how much money I made in the recycling. I think the better question is why wasn't I invited to that party? What a party. So let's talk about a buy and hold, something you can also do with your IRA. So this is just an example. You can plug in numbers in your area where you might live. I'll pick on my son still. He's buying and holding, and he's in like Alabama and Florida, and North Carolina, and you got to find your team or your people that you trust. And you can go, like in this example, buy a property 250 and 253 and get in income and buy it with your IRA. And so then that income can go to your IRA, and you can see, a $19,000 return on $250,000 is not a bad annual return. So that's just the net income on the cash flow. That does not include any appreciation. So then obviously the home's appreciating, and at some point you sell the home, and all of that money, I assume if it goes from 250 to 300, depends on when you sell, right? Or 350, right? That's an additional return on top of the annual net income. And so you can absolutely buy and hold with your self-directed IRA. The other thing you can do is seller finance. You can, when you go to buy a property, you can let's say you don't have enough money to purchase the asset, but you have enough to put down a down payment. So you can go to somebody and say, hey, look, will you seller finance? And so if you're selling it for X, I can give you $30,000. You can carry the balance. I'll pay you interest and go and then rent that property. And you can see after, renting the property out, pay the mortgage, there's a monthly profit of $600, $7,200, $7,200 in monthly profit to your IRA and a $30,000 investment. What's that math? It's over 20% annualized return. That's using a little seller finance. Very creative, not to mention the upside and appreciation. Fix and flip, same thing. You can do the fix and flip. and that went too fast. And you can do the same thing, and you can syndicate, meaning you can either borrow non-recourse funding, or you can also, let's say you don't have $186,000 and you don't want to borrow, but you could partner with other individuals, other IRA investors that you might know, and go buy an asset and flip it. I see lots of people flipping using their IRA, and lots of buy and holds. I would say I'd see more of this than anything. I see more people using their IRA to invest in a fund with an individual or an organization. And so we all see different investment opportunities in the real estate market, lots of them. And we see them, and you can invest in them with inside your IRA or outside your IRA. But you can see the difference investing inside your IRA or outside, based upon a 10-year window or a 20-year window. And so a 10-year window, you can see, earning, I think this was based on a 10 or 12% rate of return, you'd have $475,000 by compounding your interest year after year. Or if you do it outside your IRA, you're having to pay taxes on it. And so it's $150,000 difference just on the 10 years. Is that the right math? $140,000. Over 20 years, look at that. It's over $500,000 difference by doing this inside of your IRA. So I share this with you because I think most people still have day jobs, have other things they want to do, and they just want to be in real estate. And there's so many different funds or syndications or opportunities you can invest in. But this route can be a very powerful way for you to compound, avoid paying taxes, because a lot of individuals I meet are already investing in real estate funds. They're writing a check from their checking account directly to an investment. As they do so, that money goes into the investment. The fund pays out distributions, right? And those distributions that are paid out to you, you got to pay taxes on. But if you start using your IRA, investing it, then those distributions go back to your IRA. And if it's a Roth, you don't ever pay taxes. If it's a traditional, you're not paying taxes now. It's compounding. And so the power of compounding interest is a game changer when you're going to retire. These little things and these little tricks. This is why I never thought I would talk about IRA. 20 years ago, I'd be a self-directed IRA guy, because that's just not like the sexy thing to talk about. IRAs, IRS, taxes, but it frankly is. Because if you can understand the game and understand the vehicles that the IRS has approved for us to use and utilize them the best that you can, this is sexy. An extra $500,000 or $150,000 in your retirement account because you're using a vehicle that you weren't aware of, complete game changer. I see people doing this all of the time. Literally, we have thousands and thousands of clients now that are buying and selling different transactions, buying Bitcoin. Carson's buying machinery, fix and flipping machinery, $15,000, $20,000 deals every 3 months. So you can be doing this as well. Funding a business. Everyone's heard, well, maybe you haven't heard, people that have funded in different businesses. The most famous one of all time is Peter Thiel, who put his Roth IRA and funded his interest in PayPal with a Roth IRA. Well, you can imagine what that did. His small little Roth IRA that owned part of PayPal, he sold for hundreds of millions of dollars. Of course, if we all knew that PayPal was going to be what it was, we would have done the same thing. But, it's a risk. Funding in brand new businesses is definitely risky. It's one of the riskiest things you can do, but also has one of the biggest upsides. So you also can use your self-directed IRA to invest in businesses. And you can just do the math on this. You can see over a period of time of 10 or 20 years, what $50,000 plus some contributions every month will do. And it's quite significant. So invest in what you know. If you know the restaurant business, which I don't, and I wouldn't touch, invest in the restaurant business. But if you know a certain industry or space, feel free to do that as well. There's some rules of what you can and cannot do. Like if it's your restaurant, most likely you can't use your IRA because you're taking checks from there and you're managing it. But if it's investing in a restaurant that you have ownership potentially or will have ownership in, your IRA can be the owner of it or something else. So I'm going to open it up to a lot. So the questions and answers here and look, before I end on this, here's a link real quick. You can schedule if you're looking at this. There's a lot of you are current clients of ours as well. You can also email me, Greg Herline at Horizon Trust Company or horizontrust.com. Email me any questions you have. Our goal at Horizon Trust Company is to give you the tools, the education, content to make decisions on behalf of your IRA and make better returns. Most of our clients make better returns than they do in the stock market. Not all, right? Some make bad decisions because you're doing it on behalf of your investment. But that being said, if you can make 2 to 3 or 4% per year more in your IRA with us than you were before, you're talking about hundreds of thousands of dollars over a 10 and 20-year period. Hundreds of thousands just by making a few percentage points more. And for me, I can make more because I'm investing in asset classes I understand and people that I know. And so if there is a problem, or when there is a problem, I know how to handle it on behalf of my IRA. I love doing it. It works. I have figured it out. I've taught many, many people how to do it. Now there's people doing it better than me, clients of my own that are coming in and buying storage facilities, or they're wholesaling a couple deals a year. They're turning their $5,000 into $50,000 in 1 year. There's all those stories out there, but I'm not here to say you're going to go make 50 or 100% rate of return in the first year. It happens often. I'm just here to say that you can most likely do better than what you're currently doing. And this is something most advisors don't teach. And I'm also not saying that all people should do this. A lot of people need advisors. Most of America needs advisors. Most of America is not listening, doing education, understanding other vehicles, spending time on their investments like they should be. And so email me, or if you want to schedule a call, you can go to horizontrust.com/event. But message me and we'll help you. We'll set up a call with you and help you with any questions you might have. So that being said, we got some questions and answers I want to spend the next few minutes on and answer it what anyone's got here, or at least the best that I can. So I also think I have, maybe if she's here, Claudia, you joining me here today? There she is. Welcome, Claudia.
Hi, how are
Claudia, good. Thanks, Claudia. Claudia, she has been with us for several years now, but actually, before she was with us at Horizon Trust Company, she worked with another company where I met her and was very much involved in understanding what self-directed IRAs are for, I don't know, 10, 15 years now. She's really an expert on the LLCs. She spent a lot of time in the LLC corporation business. And that being said, she oversees all new business. And so if you are working with us, most likely you at some point communicate with Claudia or someone on her team, and I want her to come on and help kind of field some of the questions, but also field anything else that I might have missed, Claudia, because I know you're listening in there. But let's just jump into some questions and answers. And by the way, again, in the link, Alicia's going to put in the link, our link, if you want to schedule an appointment, or my email. Please schedule an appointment, get with us. No pressure at all. Absolutely no pressure. We want to help you and answer questions you've got. So schedule an appointment and say if you're not sure if this qualifies for you, like you have a retirement account, an old 401k, you're not sure that you can do or use or utilize, just do a quick call and we'll tell you real quick if it qualifies, if you can do it or not. So that being said, welcome, Claudia. Is there anything you wanted to add before we jump into some of these questions?
No, you did a great job at explaining. We actually have a lot of questions that are already on there. So I want to get right to some of the questions that our clients had. One of them was, can I contribute my own money into my checkbook Roth LLC?
Go ahead, Claudia,
Personal
this is
money.
you.
You cannot. Yeah, no. You can go ahead and make a contribution to your Roth account, which the limit is $7,000 for the year, and then put it into the checkbook LLC. But you can't just put personal money into that LLC. So you have to be really careful that you don't commingle funds, that they go through the right proper channels. And somebody else asked, what is the best way to invest checkbook LLC dollars while waiting for an investment?
What's the best way to invest your money while you're waiting for an investment?
Checkbook LLC money, so if they have some money in.
Uh, Look, I think right now with what banks are offering, if your money's sitting at checkbook LLC, most likely there's a lot of banks or short-term CDs or just the savings accounts right now. You can open up a savings account on behalf of your checkbook LLC. Let it sit in there. Right now, they're paying pretty good returns. 4 or 5% you can find. So I would say that's the quick answer. The thing that, some people ask me, oh, what do I do when my money's sitting idle in my self-directed IRA at Horizon Trust? That you didn't ask that, but I'm gonna share with you with that answer as well. I find different deals every few months. They come to me every week. I see them every single week. I say no to almost most of them. That being said, I wait for certain opportunities that have the bigger yields and also the right collateral. And so when I find those, I jump on them. And so even though my money might sit earning nothing for a month or two, I get these other deals where I put my money when there is the right opportunity. I jump on them very quickly, and those returns I'm making because they're so high in the double digit returns make up for any 1 month or 2 month that's sitting there. So yeah.
We also have some platforms that are brokerage account platforms if you wanted to go ahead and put it into the stock market while you are waiting. And that way it's available to go ahead and liquidate and put back into your Horizon account as soon as you're ready to make that alternative investment. Um, so somebody's asking, hi, Greg, how do we access these biweekly recordings, please? So these biweekly recordings are actually uploaded to his YouTube channel, and I'll have Alicia put in his YouTube information on there. It's about 4 hours after the webinar has been finalized. So we have a vault of the last 2 years we've been doing this every biweekly, and all of those are uploaded on there. So if you guys want content, that is the best way to go on there and learn about what self-directing is. Somebody is asking, can I do business with my checkbook LLC and my personal LLC?
Well, with your personal LLC and your checkbook LLC, uh, it would kind of a little bit depend. The quick answer is no. The longer answer is depends. Like for example, if the business is this, if you're going to invest in a fund or in a particular deal passively, your personal LLC could invest 100,000, and so could your checkbook LLC. And let's say that each invested whatever the same amount, $100,000 each. The profits or distributions would have to go back in equal amounts to both you, your LLC, personal LLC, and your checkbook IRA LLC. And I say that because I know you're not asking, but I want to be clarified because some people are like, oh, cool, I'm going to put 100,000 in each, but I want my IRA to benefit more and give it a bigger return because you're trying to avoid taxes. You can't do that. It's got to be pro rata the right percentages. So
Or the other way around, they want to use their funds
yeah,
before
yeah,
retirement, before
that's right.
retirement age, and it's like you can't do that.
Yeah.
I have somebody asking, you have HSA on your list. If I have two HSAs that I no longer contribute to, but will continue to hold, can I use these to move to Horizon Trust? That's a great question. The answer is yes. If you have any HSAs or any kind of accounts that you have with another custodian, we can go ahead and transfer those over. The only ones that we can are 401ks that you're an active employee at still, so that we usually can't do. But schedule a call with one of our specialists. It looks like Robin, you're already one of our clients. So just reach out to your IRA specialist and they'll be able to go over your options with you. I understand that you can PML out of a self-directed IRA. Can you wholesale?
You can wholesale, correct?
Mhm.
Yep.
Yes,
Yes, you can.
you can. You can. You just don't want to make it into where the IRS is looking at as you are running an active business. So wholesaling, to be conservative, we don't recommend for you to do more than like 3 a year. But that's something that you would hire a CPA and a good CPA that can go over your situation with you, and they'll be able to give you more advice on it. But you can wholesale from the
But even
SDIRA.
if you did just 2 to 4 a year, I mean, you're talking about the returns you get. If you know wholesaling,
Yeah.
I mean, we've had people that do their 2 to 4 a year who uh, their IRAs are crushing it. I mean, they're
Yeah.
getting 400% rate of returns per year. I just don't like to, I'm not, I keep the bar have low expectations and just do better than what we talk about. Yeah, most people are out there advertising wholesale and you can make hundreds of, 100% on your money every year. Sure, you can do that. But like I said, the focus is 2 to 4% more than you're doing currently.
Yeah. What is the best way to invest checkbook LLC dollars while waiting for an investment? We already answered that one. So we have somebody else saying, can my IRA invest into my personal LLC? Example, 25% into a startup. We already answered that one too. People are putting the same.
Well,
Okay.
but let me just talk about that for a second.
Okay.
If 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 you're doing a startup business that you're investing in and it is more passive, you're not being paid to manage it, then your IRA, your self-directed checkbook IRA could invest in that new entity. But you can't be taking a salary or compensation or a management role in it.
Mhm. Yeah, that's super important. Robert is asking, can a 403B be converted into a Roth IRA?
It can. If it's an old 403B, what you would do is you would transfer the 403B over to us at the Horizon Trust Company. It'd be a traditional then. We'd establish a traditional and then we'd convert the traditional, obviously with advice from your CPA to make sure we don't, you want to make sure that it's the right timing to do it. Then we can convert it to a Roth. You can convert it all to a Roth or a portion of it to a Roth.
Hmm.
So yeah.
Yeah, depending on your financial situation for the year, your CPA will let you know what the best advice is for you. June is saying, I loaned my money from an IRA account to an Airbnb LLC and they have not paid. Can I use my IRA money to hire a lawyer to get my money back?
Good question. I don't know if I
It's
know
called
that.
an
Do you know that one,
yeah,
Claudia?
yes, you are allowed to pay administration fees through your IRA. You could do it in a bill pay request. So you would just send in a bill pay with the invoice to the attorney, assuming that he's only doing services to actually do the
Benefit your
litigation,
IRA.
yeah, for the
Yeah.
benefit of the IRA or loss of the IRA just to prove that that's a loss. You can go ahead and do that. If it's in a checkbook LLC, then you would do the transaction from the bank account of the checkbook LLC and keep your invoices for any kind of auditing purposes. So yes, that's very unfortunate that you're not getting your money back. Um, if an investment stops paying as agreed, does Verizon offer any assistance to try to get the issue resolved?
Oh, we don't really offer assistance. That being said, just because it becomes potentially a liability if it's so the best thing we can do is we can give you some depending upon the situation. Everything's so different. Like if you're I'd say the best thing you can do is just shoot me an email, Greg Herline at horizontrust.com, and explain the situation. And if we have like a recommended attorney that can maybe help you, that you can, get if you're looking for someone that give you some advice and or help you try to recover, absolutely willing to give you a couple referrals. Or if there's some other simple answer, I'm open to that as well. But we got to stay a bit away from it when it comes to well, we've once or twice in the past, a long time ago, tried to help, and no good thing goes unpunished. Where it comes back like, well, they recommended to do this, and it didn't work, and that cost me $1,000. And it's like, okay, so we got to be careful.
Yeah. All right. So I have Mike asking for a licensed contractor who buys a fix and flip. Can I pay that LLC from SDIRA money? For a licensed contractor who buys.
If you are the licensed contractor, which is I think what you're saying, and you have a checkbook LLC, your checkbook LLC cannot pay you as the licensed contractor. No. You can pay somebody else as the licensed contractor, but you cannot pay yourself from your IRA compensation.
Somebody's
You can
asking
you,
you.
you can and by the way you understand why there's some rules around that. They want you to have access to your IRA, but at the same time it can get very sloppy. For example, all of a sudden the licensed contractor just charges a few extra $1,000 just because, and no one would know if that was out of the range or not. And so all of a sudden you're taking advantage of the IRA. Can't do that.
I have
Good
Dorothy that
questions
is
today.
asking,
Really.
yeah. I have a solo 401k with Horizon Trust that has about $10,000 of uninvested funds. I'd like to use that for updates for my new house. Can I do this? I currently have three other loans out. So the answer to this one is you can't go ahead and use it directly from the 401k, but the 401k has this really cool feature that is a personal loan that you can take. You can take up to $50,000 or 50% of the account value. So even though you have loans out, your account value is still whatever the loans are plus the $10,000. So potentially, if you have enough, you can go ahead and take out a loan of $10,000, and then you would pay yourself within 5 years, and you would go ahead and do the interest rate. All of that interest goes back into your 401k, and that grows the 401k for your retirement account. So the answer is yes, you can go ahead and use that money, but you can't use it directly from the 401k. It has to be a personal loan.
Hey, thanks for watching this video. Hopefully you enjoyed it. There's lots more great content for you to learn and enjoy and apply to. And so anyways, click on the link below and listen to more videos or set an appointment with us. We look forward to hearing from you and also helping you.